All right, Bulls and Bears, BX4 News back in the building, back with another dose. Ride the bull, prepare for the bear. What else do we say here? Anyways, let's go ahead and get into it, folks. It is Tuesday. It's March 18th, 2025. A lot to get into today. The consumer is scared, folks, and consumer confidence has taken a deep dive. And according to some recent data here, that's even worse than we thought. We're going to get into that. We're going to dive into the retail sales numbers and show you what's happening with consumers. Are they strapped out? Well, yes, it's beginning to look like consumers are beyond strapped out. We're going to get into that. Also, the devastating tornadoes and all the home losses. I think that's going to really put a floor under home prices. Sad to say for those of you that are looking for lower home prices. But I've got some information here regarding the cost of lumber and what's happening recently with tariffs. We're going to tie it all together for you with the economy. Let's go ahead and get started. Please make sure you are subscribed, and let's go ahead and start right here. Oh, by the way, thank you to Lily for the background. Pretty cool, right? I need to start using stuff like that more often. Let's go ahead and start, though. Recession warning signs are flashing red as consumer confidence collapses. We showed you the surveys. We've pointed out to the levels of credit card debt that people are under right now. And people are starting to be very, very cautious. In fact, if you look at the retail CEOs, they're telling us that consumers are becoming very, very choosy. In fact, things like cigarettes and chips and snacks are dropping big time as far as what consumers are buying. They're basically filling up their gas tanks and leaving, for the most part, not always. I mean, of course, you still see people in there buying stuff, but the amount of people getting gas versus the amount of people coming in to buy snacks has changed. Now it's mostly people just buying gas, and we'll see if gas prices actually come down. But this is out of Forbes here, and what they're showing us here is the market entering correction territory versus gold. So people are running to gold as a safe haven. We see the S&P 500 in the blue. It has been dropping. Slight recovery over here over the past few days, but we're seeing more and more signs that people are taking a flight to safety, both in the price of gold and the way consumers are spending their money. And we're going to talk more about what's happening with consumer spending here in just a little bit. And also, you add tariffs on top of all this with threats of further price hikes. We've got the CEO optimism at the lowest level since the onset of the health crisis, right? We're looking at a chart right here. So, folks, things are about ready to heat up, unfortunately, I think, to the upside as far as price levels and inflation as well. And when you look at what's happening right now in the housing market, take a look at this. The destruction of so many homes because of the recent tornadoes. We also have wildfires, and 40 people were unalived here just recently across several different states. And what we're seeing here out of Realtor is these tornadoes now, they seem like they're going further north here. We have Chicago up here with tornadoes reported, northern Missouri, northern Tennessee, across, looks like Indiana as well. So very strange weather, folks. And the more destruction we see, and of course we came off this massive hurricane season and wildfires going crazy in multiple different states now. What's going to happen with the cost of lumber? Well, I see higher lumber prices, because here is the situation, folks. The U.S. is the number one country that needs to import its lumber here. Take a look at this. And I ran across this video here a couple days ago. Why is America the biggest lumber importer in the world? I knew we imported a lot of lumber, but I didn't know we were the biggest in the world. And this is looks like an interview with Mike Rowe. I think that's the Dirty Jobs guy. So I did some research here. Take a look at this. This is United States wood imports by country. And I'll try to zoom in here. We see the top, Canada, tariffs. Number 2, China, tariffs. We also go down to number 4, Mexico, tariffs. So 3 of the top 4 countries that we import lumber from, that we drastically need to have affordable housing, are being tariff wars are happening right now with these countries. So I don't see prices coming down, folks, definitely for materials. And unless something big happens in the lending category where money is pulled back from lending, or banks have to severely restrict lending or restrict mortgages, or investors drop out of the market, I don't think we're going to see a housing market collapse anytime soon. unless something massive happens like a black swan, which changes one of those categories that I just talked about. And I know a lot of people are disappointed to hear that. People want to have lower home prices for the most part. I hear from people all the time that are priced out of the market. They're asking when the market's going to come down, when the market's going to come down. Well, keep an eye on this channel. We tell you exactly what would make home prices come down. And I've said it here over many times. I try to include housing a little bit in every report, sometimes more than others. But the things needed to make home prices come down are investors need to be restricted from buying homes. And we're talking about, even if you just restrict the billionaires, that would be enough to bring home prices down a lot, at least 30, 40%. Some estimates say up to 70, 80% drop in home prices if you stop the mega wealthy, the top 10%, the billionaires, the investment firms. If you stop them from buying homes, that would make housing much more affordable, right? You also have lending. If the government no longer backs most of the loans, which they're doing right now, that would be another big downward factor in home prices. When you have endless money printing capabilities, you can go out and pretty much buy as many mortgages as you want to. So therefore, there's no risk to the mortgage lenders and the banks if they know that Big Brother, in this case Uncle Sam, is going to come in and just buy up all the mortgages. Well, now with the money flow disruptions here, with all the investigations and looking around and seeing what's happening, where this money's been going, will we see a big disruption in lending, right? So there are some things out there that could lead to a housing downturn. I'm not saying there's no chance. I'm saying one of these things, though, has to really be flipped over, basically, or black swan type of thing, where something comes in and pretty much turns the whole game upside down, so to speak, right? And just think back to 2008, all the fear that was out there when mortgage lenders were collapsing before they brought in the big rescue package and TARP and the bailouts. Before that, it was very uncertain if banks were going to be propped up or if all the banks would fail, right? Nobody knew at the very beginning. And of course, home prices came down big time at the onset of that. And of course, we know they came in with unprecedented money creation to keep the whole financial system propped up. And of course, home prices came up after that. So that's the type of thing we have to look out for, not just economic numbers and GDP and stuff like that. What's happening with the entire financial system when it comes to lending money? Right now, on another topic that could help bring prices down, either a little or a lot, is the recent developments now on federal land. So there's a lot of federal land out there, federal owned land, that's not being used. And so now there's some changes looking like it's going to take place here. We have this recent article here, Wall Street Journal. What they're saying is federal land can be used for home sweet home. Departments will work together to solve the housing crisis. So in other words, a lot of federal land, folks. The Interior Department oversees more than 500 million acres of federal land, much of it suitable for residential use. So why do we have federally owned land not being used when we have a housing shortage and a lack of affordable housing? But then you still have the lumber problem with imports now. We import most of the lumber, or we're the world's largest importer of lumber, I should say. And with the tariffs happening, 3 of the 4 top countries have tariffs against them. So even if we open up all this federal land for housing projects, will it be cheap housing, or is it going to be very expensive still, even though they're saying it's affordable housing? Well, we've seen many stories, and I've pointed them out here all the time, that affordable housing, we still see people getting evicted from affordable housing. We still see people struggling to get by, to make their payments with, quote, affordable housing. So we'll have to see how it plays out here. And when it comes to affordable housing, we're also seeing more stories like this here out of San Jose Spotlight. Affordable housing to replace East San Jose abandoned buildings, folks. We have a lot of vacant commercial property right now ever since 2020, when the work at home thing started up and a lot of office buildings closed down, some of them not opening back up for workers. A lot of abandoned buildings, folks. There could be a lot of affordable housing built out of this, but that's another expense. You have to completely transform the plumbing and everything else and have the units installed. So it's not inexpensive, but you would think it would be cheaper than building all new buildings. I mean, maybe not, but this is what's happening. There are actually buildings that are being converted into what they're saying is going to be affordable housing. So we'll see. We'll see if there's going to be any light at the end of the tunnel for all the people that are just priced out of the housing market. And some people say affordable housing is not going to be an ownership situation. It's just going to be rent or rent-controlled units. So it's really not going to help the ownership situation. But even if you own a home, you're still under the thumb of insurance, under the thumb of property taxes. You're never out of the having to pay for your housing no matter what you do. All right, moving on here, folks. Let's talk about this consumer spending situation. Here's how AP put it. Americans increased spending tepidly last month. So are people running up more debt? Are they going deeper in debt? Yes and yes. Is it going up less quickly than it was previously? Yes. The rate of increase has slowed, even though people are digging themselves further into debt. And we see this picture here. It looks like, is that Costco with the big screen TVs here? $900. Everybody wants a bigger TV, right? Let me ask you, once somebody's head on the screen is 3 times as large as a real human head, isn't that big enough? I mean, do you want the human head to be 10 feet wide? I mean, when is it no longer realistic looking when people that you're watching on TV are actually giants? All right? I'm just saying that people just want bigger and bigger TVs all the time. U.S. shoppers stepped up their spending just a bit in February after a sharp pullback from the prior month, signaling that Americans are shopping more cautiously, just like we heard about from some of the retail CEOs that, like the one we talked about, people are buying less snacks and pretty much just getting gas a lot of times. Shoppers are more cautious as concerns about the direction of the economy mount. This news is everywhere about the tariffs and the possible rising prices. Retail sales rose just 0.2% in February, a small rebound after the sharp drop of 1.2% in January. Commerce Department said on Monday, sales rose at grocery stores, home and garden stores, online retailers. Sales fell at auto dealers, restaurants, and electronics stores. All right, and folks, if you've been on this channel, you know as well as I do that all the spending we're seeing right now, or the majority of it, about 70%, is debt-driven spending. People swiping their credit cards, and every time you look at the report, the debt goes higher. So this economic activity that we're seeing in consumer spending is completely dependent. I shouldn't say completely. It's mostly dependent on credit card issuers allowing people to go further and further and further into debt. And we're at a time right now where delinquencies are rising, matching the levels from the financial crisis. But unlike the financial crisis, credit card companies, banks are still letting people go further into debt. So a lot has changed since the financial crisis, where credit card companies and banks are not afraid like they used to be to let people run up more debt, probably because they know they'll probably get rescued if you know what hits the fan. All right, now let's move on to a pretty broad discussed topic, or a pretty common topic that people are talking about in the financial world, and that's student loans and student loan forgiveness, folks. Look what we just found out here. 9.2 million borrowers are likely delinquent on their student loans. And wait till you see the percentage of all the loans that this represents. This is the College Investor. And what they're saying is here, over 1/4, that's 26%, over 1/4 of all borrowers expected to make payments are now delinquent on their student loans. And what do we hear for years coming out of the pandemic, the health crisis, whatever you want to call it, is we heard that there's an economic recovery, right? There was the shutdown, and then there was the recovery. Well, what kind of recovery is it where, 5 years later now, we have 1 in 4 people can't even pay their student loans? They're delinquent on their loans. And this is just the minimum payment. This is, even if they were current, it's still not good when you have this many people so far under these loans, or so far indebted here to their college education, that they're stuck. Borrowers who miss payments may see credit score drops of 129 points according to Vantage Score. So even if home prices come down, you're going to have, in this case, over 9 million people with really badly dinged up credit scores. And will they qualify for a mortgage even if home prices come become to be a little more affordable. And we have over 42 million student loan borrowers, and about 8 million of them remain in forbearance under the SAVE plan. So we still have this rescue, this forbearance going on for years now. People are too far down into the rabbit hole of grinding, right? Barely scraping by, living paycheck to paycheck, and you add on student loan payments on top of everything else, on top of housing, cars, cost of electricity, insurance, you name it. It's only going to get more difficult unless something drastic changes. Right. Also, jumping back over to the cost of owning a home and housing and the expenses that go along with housing, State Farm just got a 22% rate hike approved in California. We're looking at this devastating picture right here. And other insurance companies are going to likely follow suit. A 22% increase, folks. So the 2-3% inflation, not even close when you look at what a lot of people have to suffer under. And if you just look at your electricity bill, I think you'll see that 2% is a very, very low number that they're trying to tell us, between 2 and 3% inflation. And if you look at the real number, that the way it was reported back in the 1990s before they changed the formula, inflation would be at least double of what it is right now. But of course, they're reporting kind of cherry-picked data and certain goods and items to make it look like inflation is actually lower than it really is. All right. Also, folks, something we talk about here a lot, we've talked about for years, is how the money is now unlimited, and it's been no gold standard since the early 70s, where they can basically print or digitize as much money as they want to. Well, recent developments and discoveries say that it's discovered now that the government has magic money computers that make payments out of thin air. So that's one of the big stories going around right now on some alternative and some mainstream media outlets. But folks, we've known that for years. What's one of the things I say? They create trillions of dollars at the click of a mouse, right? They no longer even have to print the money, which is printing dollar bills or minting coins. It's actually digits on a screen. And according to this report here, there are 14 supercomputers that basically issued payments to who knows where. I mean, they're still looking into it. Let's see what they say here. There's something like 11 of these computers at the Treasury that are sending out trillions in payments, right? No shocker, no surprise, unless you're just tuning in for the first time. But what if the money supplies 10, 20, 100 times of what we're being told, right? We're told that the U.S. government borrows money, which is in the 30-something trillion dollar range right now. What if it's so much more than we're even being told? I mean, if you look at derivatives and if you look at other, all debt added together, we're already in the 100+ trillion. Some people say 2, 3, 4, 500 trillion dollars just in the U.S. when you factor in derivatives and all the debt, when it's the federal debt, the personal consumer debt, and also city, state, local government debt, corporate debt. 100+ trillion dollars right there. You look at unfunded liabilities, that adds on another, I think 100-something trillion. You look at the derivatives. I mean, nobody's ever compiled all this different type of debt and obligations, but you might get up to 500, 700 trillion. I mean, nobody even knows. That's how enormous it is. But that's what happens when you have digitized money that you can just create out of thin air. So at least some more of this stuff starting to come out. A lot more people are realizing, kind of waking up and seeing what's happening with this, but not enough, right? So please share this video. Tell people about the monetary system and how it's highly inflationary and how this is only propped up with more and more debt, right? It's kind of like a Ponzi scheme. When the people at the bottom stop coming in, the people at the top of this Ponzi scheme, which looks like a pyramid, the people at the top stop being paid when new suckers stop coming in at the bottom, right? It's the definition of a Ponzi scheme. In this case, coming in at the bottom is more and more debt propping up the top of that rectangle pyramid. So, folks, let me know what you think about all this. The massive number of student loans not being paid, the delinquencies, the fires, the lumber with the tariffs that we import, lumber from all these countries, tariffs, tariff war going on against these countries, and the devastation, making this Looks like highly inflationary. Could I be wrong? Absolutely. Please let me know what you think down in comments. The consumer spending and also the warning. What do we see here? This warning we talked about at the beginning of the video out of the Wall Street Journal that consumer confidence has plunged now to the lowest since the health crisis, folks. Let me know what you think about all this. Thanks for being here, everybody. Keep stacking. Make sure you are subscribed with this button right below my finger right here. Thanks, everybody, for keeping this channel alive. Keep stacking.